Well, the yuan is weakening against the US dollar after China scrapped reserve requirement rules that were originally meant to prop up the yuan. Now, those actions were always meant to be temporary and to be scaled back once the yuan regained firmer footing. But this immediate market reaction that we've seen really underscores the very much high wire, very precarious balancing act that Beijing plays when it comes to the yuan. A stronger yuan has helped defend against claims that China plays unfairly on trade, devaluing its currency to boost exports. And it also helps investors keep more interest within, in terms of keeping their money onshore to find returns at home. The only thing is, this stronger yuan that we've seen, the surge that we saw before this week, has already started to actually hit exports. August exports a little bit weaker than July. That's data that we saw come out late last week. Now, again, Beijing is trying to engineer stability on the markets ahead of a major leadership shuffle due to take place next month. And this particular move, even though we've seen it weaken a little bit at the beginning of this week, the yuan is still up about 6.5% year to date. That means it still has erased last year's losses, hanging on to that gain. And analysts say this supports the idea that depreciation fears are gone, and that the government is trying to push more two-way flexibility of the renminbi. Take a listen to what Eric Norland of CME Group had to say.
So I think that those two factors will essentially conspire together, a flat yield curve and very high levels of debt, to push China's economy towards a slowdown. And one of the great things for China, if they have a slowdown, would be to have a more flexible currency regime that allows the yuan to depreciate naturally versus other currencies. So the step they took yesterday may be the first step in that direction.
What's important to note here is that in the short term, again, because of this leadership shuffle due to take place in October, depreciation or a sharp depreciation in the yuan is not expected. At least that's what analysts are saying. But in the long run, a lot of the risks are still there. There's uncertainty over China's economy, over how growth will fare as the year comes to a close. And this idea that domestic investors are still interested in diversifying into foreign assets abroad, that also hasn't gone away. And so in the long term, a lot of analysts are saying that they don't see a multi-year appreciation coming for the renminbi. Back to you.